As we saw in 2025, political uncertainty can drag stocks lower. We saw consistent sell-offs in March and April as the president threatened heavy tariffs on many countries. However, volatility eased after Trump paused Liberation Day tariffs. Trade deals with dozens of countries also poured in last year. Some geopolitical factors to watch this year include U.S. tensions with Venezuela, the ongoing war in Ukraine, and the Supreme Court decisions, don't forget about that one, on tariffs and his firing of federal officials. The whole Lisa Cook thing, yeah, we're going to get a decision on that soon. It's also a midterm election year, could put pressure on U.S. markets. David Wu joins the broadcast now. David is founder of David Wu Unbound. David, Happy New Year. Thanks for being here. So let's kick things off with a look at your predictions for 2026. What will you be watching surrounding geopolitical risk?
I actually think that geopolitical risks will be receding in 2026, especially because I think the war in Ukraine is winding down. I think we're literally entering to the final phase of the negotiation. I think the only reason why, Zelensky is still playing hard to get is because he understands he is under pressure to sell this plan to his own people. I mean, this is a man who got his country into a war in which is destroy half the country, the other half the country basically having left. So I think from that point of view, I think the important thing is to understand that actually the agreement as it's set out is actually fairly reasonable. And I think from that point of view, it doesn't really matter. I think what I'm preparing for is the possibility that, a deal will be struck sometime during the course of the next 3 months, and the sanctions on Russia are lifted straight away. Because this is actually is very, very important. Because, as you mentioned before, the most important theme in 2026 is the US midterm elections. And as we all know, in 20 out of the last 22 midterm elections, the president's party has gone on to lose seats in the House. Right now, with Trump's approval rating barely above 40%, I mean, history is completely against him. This is why, if he's to basically put his party in a fighting position, he needs to make affordability the central issue of the campaign. And there's nothing that will put him in a fighting position than to drive down oil price. This is the reason why ending the war in Ukraine has never been more urgent as it is for Donald Trump and for the Republican Party right now. And this is the reason why I think the oil price outlook, at least, is quite bearish this year. I think for the same reason, I'll be very surprised that Trump does not tackle over Venezuela. If Maduro continues to, essentially hang tough there, and that guy is a survivor, if there's such a thing as a survivor in politics, I think Trump will once again tackle, like we discover about Trump in 2025. He tackles when the tough moment comes, and then that will also help drive down oil price. So I think in general, I think, what is very clear to me is that everybody needs low oil price in 2026, and that's probably what we're going to get.
There are other global economies to keep our eyes on as well. How about Europe? You mentioned Venezuela, you mentioned Ukraine. What do you think how is Europe situated as a key factor in the next 12 months, David?
I think where Europe comes into play is this, okay? As you probably know, the big story of 2025 is that notwithstanding, Trump's massive tariff against China, notwithstanding the fact that Chinese export to the US dropped 25% on the year, the Chinese economy almost managed to grow 5% in 2025. And the reason is because they've been able to flood, Europe and the rest of Asia with Chinese goods that would have gone to the US instead. So what's happened is that China's trade surplus has ramped up to $1 trillion in 2025. And then, and Europe ended up holding the short end of the stick. Until now, Europe has been unwilling to confront China over trade simply because Germany, which has huge investment in China, has big market share in China, at least in the auto market, has been holding back the rest of Europe in terms of taking a more retaliatory approach. I suspect in 2026, we could see Europe starting to change its mind. And I think from that point of view, ironically, in an election year in the US, I would say that the risk of a trade war between US and China has definitely gone down because Trump doesn't want any trouble. I would argue that the chance of a trade, confrontation between Europe and China has gone up in 2026.
David, I got less than 30 seconds left. Anything else on your outlook you think we should be paying attention to for the new year?
Yeah. I am very bearish on Bitcoin. I think Bitcoin is going to be in big trouble. I think too many people wrongly associate Trump as being bullish for Bitcoin. Trump is bullish for stablecoin, and stablecoin is not Bitcoin. He's bullish big stablecoin because stablecoin extend the dollar's reach into the digital space because stablecoins have to buy U.S. Treasuries to back. So from that point of view, it totally makes sense why Trump is bullish for stablecoins. But for the same reason he's bullish for stablecoins, obviously goes out saying it's very bearish for
David,
Bitcoin. And Bitcoin is still up 50% since the day
I
Trump
got to
got
leave it there,
elected.
David. David, got you there. Unfortunately, I got to end the show. David Wu, founder of David Wu Unbound. Thank you for being here.